Good morning. I'm Jason Brown. I'm joined by my colleague Kent Kramer, and we'd like to welcome you to this webinar, Elections and Your Money. A few housekeeping notes to start with. We're going to try and be at about 30 minutes, and then we'll do a live Q&A afterwards as well. You can stick around for that if you're able. We're going to be recording this, and so you can find it on our website in our content section. And if you do have any questions, you can click the button at the bottom of the screen and you can submit questions. If we have time, we'll get to those. And if we don't get to them, we'll still answer them.
Yeah.
So,
Appreciate that.
Ken, I think where I want to start today is just give us a status update on the election, according to Kent Kramer.
Yeah. Well, anybody who's been paying attention to the news, I think the word that we all would use is it's close.
Yeah.
Right. I mean, and it's close whether you're looking at congressional races, Senate races, certainly the presidential race. And one of the reasons it's so close is that over the years, the number of districts, for example, in the House races that are competitive has just shrunk. I think the recent number that I read is about 13% of House races are actually competitive. So that means the other 87% are, pretty much people know
And
which
decided.
party is going to win. So it comes down to a very few races in terms of these congressional ones. And then
And if you're fortunate to live in those states, then you've been experiencing a ton of commercials.
yes, and your TV stations are really happy. They're making a lot of money right now on political advertising. In the Senate, it's interesting because 1/3 of the Senate is up for election every 2 years. So it turns over every 6 years. This year, there are more Democrat seats up than Republican seats. So it's a little harder for Democrats because they've got to defend more seats. But again, there's only, half a dozen seats that are even competitive of the ones that are up. So again, the attention goes on those few races, and we'll see how they go. On the presidential side, it's obviously very close, and it seems like it's becoming closer. It's kind of come and gone. I like 538 as a website for data. Nate Silver started 538. He's a kind of an aggregator of polling data and a statistician. And so this was on his website, on that 538 website just a few weeks ago, October 10th. And he was running simulations, statistical models that were showing that Vice President Harris was winning 53 times out of 100 if you just run thousands of simulations.
Got it.
Then just this past week, I looked there again, and now former President Trump wins 51 times out of 100. So you see it's closer. There's another couple slides on his website that I really liked, just showing how things are kind of trending over time. I underlined on that slide this idea that he says uncertainty will decrease as we get closer to election day. So this is again from October 10th. Okay, this is from October 20th. Things are actually tighter. I'm not believing that uncertainty is decreasing.
Yeah.
Right now in terms of that. So you might want to strike that from his site because it feels like it's just so close that anybody talking about certainty, I feel like they're just, they're trying to sell something that is really not accurate.
Yes.
At this point.
Yeah.
And the other part of it that I would just say, we kind of all know that there are certain states they're called swing states. They're the ones that will probably determine the presidential election because of the way the Electoral College works.
Right.
A lot of different polling, and here's 538 data on the left, just showing how close some of those swing states are. If you look at Ohio, Georgia, Arizona, Wisconsin, Pennsylvania, they're very close. On the right-hand side is this thing called polymarket betting odds. Now, this is interesting because in 2016 and 2020, people said, hey, the polling industry really failed to do a good job of predicting, right? So, but other markets, betting markets, actually have existed for a while, more outside the U.S. and inside the U.S. But for example, the University of Iowa has run a futures market on presidential elections for years and years, and it's been fairly accurate.
So I just learned about this. I listened to a podcast 2 weeks ago, and maybe I'm naive, but I thought you can bet on presidential elections.
Yeah, you can. And, it just makes sense the way the United States is going right now with all the online betting. But yes, you absolutely can bet on presidential elections. You can bet on Senate and House races. You can bet at the state level. And just kind of as an aside here, we're not encouraging anybody to participate in these markets. But the interesting thing about them is rather than relying on polling data, this is just tracking money flows. So if you think about it, it's people putting money down with the idea of, I'm putting money down in a result that I think is going to produce a profit for me. So the idea here is, hey, maybe these markets are actually more predictive or more accurate than the polling
Mhm.
markets. Now we'll see, but as you see those poly market betting odds on the right, what you notice is in some of the states where things look relatively close in terms of number of votes, if you look at the poly market, let's look at Ohio. This is one I think is the most interesting.
Yeah.
The 538 polls would show former President Trump leading about 54 to 46, let's say. If you look then at the poly market betting odds, the odds right now in terms of where money is being laid down, it's a 92% chance, or the odds are 92% that former President Trump wins Ohio.
Yeah.
Now that's a big spread between what looks like, hey,
Something kinda
9
close.
percentage points, 8 percentage points to a huge disparity in terms of, what the result might be. So we'll see. I just think it's interesting in a different lens on
Mhm.
how close really the race is.
Yeah.
The other thing I will note about Polymarket, and it's not approved. There's actually a court case now where the U.S. government is saying, "Hey, we don't think this is legal for people to be betting on elections." And one of the reasons they give is there's a possibility if these markets are relatively small, that somebody with a ton of money could just throw money at one side of the bet and make it look like public opinion is actually swinging
Yeah.
way more in favor of a candidate than it actually is. So there's a question about manipulation.
Mhm.
They're pretty big markets. There's literally billions of dollars being bet right now, but it is uncertain. Again, we show it just because I think it's an interesting development and something else that people are paying attention to.
Now, one of the things you've talked about, we're going to talk about now, is just kind of some of the priorities that the various sides have.
Yes. Yeah. This is from the Gallup organization. And what this does, it just lists by kind of priority order what the issues are that voters care about or are concerned about. And you look at that list and you'd say, gosh, that seems like a pretty reasonable list. The economy, state of democracy, terrorism, national security, Supreme Court, immigration, education, all really important issues and things that are related to someone's positions, their policy positions when they're running for president or to participate in Congress. What I found really interesting, I know that you did too.
Yes.
Yeah.
This was, I think for me, it was the most interesting slide when you sent me the material for this webinar.
Yeah. And the reason is if you look at what is the highest priorities for Republicans and Democrat voters, they are completely different. They are 5 different items, all from that same list, but what it reflects is the prioritization of what's on the list.
Right.
And so I think this one really says a little bit about why people feel like there's polarization maybe, or why there's such a difference of opinion. It's because the things that people are prioritizing, well, at least for right now in the top 5, they are different. They don't overlap at all.
And I would think, I mean, we haven't done the research, but that's what was surprising to me, because I think in normal elections, there would be some priorities that are the same.
Yeah.
And there's not.
Yeah. It's not that Democrat voters, for example, don't think the economy is important.
Right.
They just don't think it's as important in terms of how they're voting as the state of, let's say, democracy or what's going on in the Supreme Court. If you flip that and you look at, Republicans, it's like that immigration status thing is super important, at least to the party and the way they're positioning it. And you don't see it on the list for, Democratic top 5 issues anyway. So I think it's somewhat explanatory in terms of why things feel so different,
right,
and how candidates are talking about the issues.
Yeah. That makes sense.
Another survey that I like was done by the CFP board, the Certified Financial Planning Board, and they were just talking to Americans about how they felt about their financial situation in light of the election. One of those things was, hey, 4 in 5 Americans expect their personal financial situation to get worse if the candidate that they're not supporting wins.
Okay. So this is, I suppose this was also an interesting slide to me, because I've been checking in with our advisors on the conversations that they're having and how many are they having about the election, what sorts of questions are they getting. Happy to report, first of all, that many of our advisors are saying, even in this controversial election, they're having fewer conversations with at least our clients. So the story I like to tell myself is that the education you've been doing, the education our advisors have been doing about the fact that markets and elections aren't really correlated is
Mhm.
kind of working.
Yeah.
But when we do hear questions, it's mostly about fears related to their money if the other side wins.
Yeah, that's exactly right.
And we both sides.
yeah, both, it doesn't matter. It's just
Mhm.
both sides do not have confidence in the other side.
Yeah.
Okay. But I think that's the easiest way to put it. And so the result of that is it's kind of a similar poll, similar result.
Mhm.
What you'd think is a lot of people are putting off financial decisions. So more than 3 in 5 are putting off making decisions because they want to know kind of the result of the election, just because that extra degree of certainty, I think, at least we feel like, well, I'll know more, so I'll feel better about making a financial
Mhm.
decision. Interestingly, corporations are doing the same thing. They're putting
Yeah.
off capital spending until after the election, not because they don't have the money or capital markets are frozen or nothing like that. They're just saying, if we don't have to do it today, let's wait and see if anything circumstantially changes as a
Mhm.
result of the election. So that's interesting. And then the last one here from that same one is kind of how people feel about post-election. Most people polled said, hey, we expect financial conditions to be better after the election. Okay, so what does that have to mean? Well, if you are really worried about your financial situation if the other side wins, but you feel like things are going to be better after the election, you must feel like your side's going to win. Otherwise, you wouldn't feel good
Yeah.
about
Yeah.
the post-election prospects. So it's just interesting. And this one, it's true for both Republicans and Democrats.
Yeah.
There is one group, though, independents, they don't feel good about either party winning. They feel like things are likely not going to be better no matter who wins after the election. So I think maybe Republicans and Democrats, as a rule, like their candidates, and independents are saying, I'm not so sure I like either candidate.
Am I allowed to say that I'm an independent?
You can
and then
disclose whatever you want.
you can also draw conclusions from what Kent said about how I'm feeling.
Yeah. It's just this is just measuring sentiment and what's happening in people's minds. And I think it's helpful because if anything, it just tells us, hey, the way I'm feeling, we're not alone.
Yeah.
Everybody feels
Yeah.
a degree of angst when it gets this close
Yeah.
to the election. I appreciate that, many of our clients right now are not expressing a high degree of angst,
Yeah.
even though I think what's happened is over the years, people they hear the same story, they understand the data a little bit better. And even though they might feel not great about it while it's going on, what's happening in their mind, their understanding of the data is they're kind of fighting their feelings a little bit, saying, yeah, but I know that feeling's maybe
Mhm.
not as true as it feels.
Okay. So remind us again of what the data says about markets and elections.
Yeah. The bottom line here is there may be some correlation if I look at certain statistics, but there's nothing statistically that would say there's causation between who's in office, whether the president or in control of Congress, and the performance of markets. Historically, the market has done better when a Democrat has been the president.
Mhm.
Historically, the market has done better when Republicans control Congress. Now, is that correlation or causation?
Right.
Again, the statistics would say it's really just kind of a funny correlation. And I do this every 2 years. I track every possible iteration of, president is X, Senate is this, House is this. And I look at all the combinations and I look at it
Yeah.
all historically. And what you find is you can find a story that supports your preferred candidate
Yes.
by picking a time frame or a mix of control.
Yeah.
So, this is what we hear. This is why sides will say, hey, we're better and they're worse,
Yep.
because they can find statistics that would seem to indicate,
Right.
well, here's a time when that's been true.
Right.
But again, that correlation, causation. But I think if you just have listened to
Hmm.
the news and listened to us at all, this is JP Morgan basically saying the same thing. There's
Mhm.
just no indication that there's a statistical better or worse in terms of party and
Mhm.
control. This is from Dimensional Fund Advisors. The nice thing about this chart, you've noticed, is it's the market return, and it's kind of it's just saying the market goes up regardless of who's in.
And this has been
Power.
a slide that has made a difference for me. And I would say also it's made a difference for our clients too.
It's just a good long view of, I think, the resilience of capital markets and maybe the disconnect or the over statement that we want to make in terms of, hey, the political thing makes a huge difference in the performance of capital markets. That hasn't been the case in the past. And this is just kind of US stocks in a presidential year by quarter historically. And I would just say this chart would say, hey, the third quarter has been particularly good in election years. This is from BlackRock. And here's just the data for this year. If you look at it, boy, pretty good year for the US stock market, up over 20%. In an election year. So you'd say, it feels like the market is more concerned about the things that matter, which are corporate earnings, how the economy is doing relative to employment, how we're doing with interest rates and inflation. All those kinds of things have a more direct influence on the market than the electioneering, if you will.
Yeah.
So I wanted to just have one more slide that I really like. I'll throw this in before we go to the next one. Here's an investment strategy for you. I wouldn't recommend two of the three strategies. One is have your money in the stock market only when Republicans are president. If you put $10,000 in 1961 and tried that one, your $10,000 would be worth $100,000. Now, if you wanted to do a little bit better, or at least historically, you could have said, hey, I'm only going to invest in the stock market when Democrats are president. Okay, your $10,000 became $500,000. That's better than the 100. But if you had just remained invested no matter who was president, so just invest at 10,000 and let it run for the whole time, no matter who's in office, well, you came up with $5 million, north of $5 million. So the third strategy seems to be the winner in this deal of the three strategies displayed here. Again, it's just a way of saying the market and the power of time and compounding are the things that we really want to be concerned with as investors.
Yes. Powerful slide.
I think this is just a great one. One thing probably that people might want to prepare for, and we've talked about it a little bit throughout the year, is that in election years, we do see sometimes a spike in volatility in the markets, going up and down. Usually in the month right before the election, it tends to peak. And then after the election, it starts to go down a little bit. This year, we haven't seen a ton of volatility. There's been a couple little bits of it. The bond market has had a little bit more volatility recently. What I would say, though, and kind of thinking about this idea of volatility related to periods of uncertainty, is because of this election's tightness and because a number of those states have absentee ballots, early voting, all kinds of things that might cause their calculation of the results to be delayed by a few days. I could see kind of a spike in volatility after actual election day because it's so close that the result isn't known yet for sure. And in that window of time, there are people, and we've heard about it both in the US and actually actors outside the US, who are setting up to just create problems in the US because of election uncertainty. So there's going to be bad actors who are going to try to play on that. And for whatever reason, because they've got a story they want to tell, and it could create some volatility, not because there's anything wrong with the economy, but just because it's going to feel uncertain. And there might be some people on the news or that the news media picks up who are they're protesting, they're saying crazy things. Maybe there are even some violent protests in a few isolated areas. All those kind of things are going to get airtime. They're going to create a sense of unease and heighten that uncertainty. But the likelihood is it's for a very short period of time. And once the results are known, that'll just settle.
So one thing that in our conversations that has changed for me is I'm going into this election actually expecting that the results probably will not be known on election night. Now, if they are, great, I'm happy. But I'm anticipating that they may not be known for a while. And I think that's going to help me through that period of anxiety.
There's a great quote by a very famous investor who has passed away, Charlie Munger. He said, the key to happiness is low expectations. And so I would just have lower expectations in terms of knowing the results in a timely way in the presidential election in particular. We'll kind of close out this section by just reiterating the bottom line. Hey, there's a lot of reasons to vote in November, and we encourage you to vote. I mean, it's important that we have an educated citizenry, that people vote based on what's important to them. That nothing that we say here I would want to undermine that. The thing that we would want to confirm, though, is that the performance of the stock market really isn't a reason for you to vote.
It's other things.
It's other things. I mean, can presidents and Congresses do things that maybe temporarily create a setback for markets.
Mhm.
They could, but the long-term performance of equities is really based on understanding the rules as made by, the US government and state governments, and then figuring out how to be profitable no matter what the rules are.
So, a mountain of evidence, data that would encourage us not to be worried, at least about our money.
Yeah.
Why do we human beings struggle with believing that data?
Yeah. This one I would just roll back to there's a field of study, behavioral economics and behavioral finance. We've both read a lot about this. A lot of our advisors have too. And I think what happens here is we as humans just have some cognitive biases or some thinking errors that we just naturally fall into. And by the way, the media and political parties know what these things are too, and say that they know
Yeah.
how to appeal directly to these biases and thinking errors. So this idea of overconfidence, we talked about that a little bit. News commentators, political parties, they talk about things as though they know the future and what will happen. And the fact is they do not,
Yeah.
but they sound very confident. And what happens then is we have stories that are running in our head, narratives. And when we hear those very confident people echoing a narrative that we think is true, then that's like a confirmation of our narrative, even if it's not based on good statistics. And this confirmation bias thing starts to roll. So now I've got three things working against me: overconfidence, narrative bias, confirmation bias. And the last problem then is usually it's structured in a negative argument because fear gets our attention.
Yes.
So catastrophizing is a thinking error that says things just aren't going to get a little worse. They're going to be horrible.
Yeah.
And so once you get into that catastrophizing mindset, wow, we just get very fearful as people. And it's perfectly understandable why we feel the way we do, even though our brains, if we feed them with decent statistics, would say, I don't think that's true, but our feelings are saying, yeah, but what if?
Yeah.
And that's where I think the unease comes in.
I think all of us who are watching some amount of TV would say nearly every commercial is catastrophizing.
Yeah.
So,
Yeah.
And most of the people I talk to, frankly, they don't like them at all.
No.
So it's interesting.
No, we don't. Richard Thaler, he's a Nobel laureate in this area of behavioral finance. And so if you're feeling like things are hard, he would agree with you. He would say behavioral finance is not saying people are dumb. He said, we don't think people are dumb. We just think the world is hard.
Yeah, it's complex.
It's complex. And there are people out there who are trying to kind of exploit these biases in a negative way to get their ends, not necessarily overly concerned about you.
Right.
And that creates a hard world. Sometimes.
Or us.
Yes, or us. Yes, it's people. Yeah, exactly.
So I'm wondering, our advisors have had a few questions, and I know you want to talk about this, about the Tax Cut and Jobs Act.
Yep.
And also sort of the estate
state
tax as well.
Yep. So the big thing that no matter who wins, they're going to have to deal with is this expiration of the Tax Cut and Jobs Act of 2017. As the title of the bill says, is tax cuts. What happened in 2017 is Congress passed a law, President Trump signed it at the time, President Trump, and it reduced marginal tax rates pretty much across the board.
Yeah.
And there were some other things associated with it, including increasing the estate tax exemption. So the big two were those two. Now, what happens at the end of 2025 is this law sunsets, meaning it just stops, and we would revert back to what the law was in 2016. So starting in 2026, that means the marginal tax rates would go up a little bit and estate tax exemptions would go down quite a bit. But you can see here, the top marginal bracket runs from 37% to 39%. That would be because it was 39.6% back in 2016. It's currently 37 for the top marginal. And it kind of does that throughout. You can 0 to 4 percentage points at each bracket. That is an increase. Whether you regard that as a dramatic increase, I think it's an open question. It is an increase. The dramatic one really is in the estate tax exemption reduction. So currently, the estate tax exemption for an individual is $13.6 million, or almost a little over $27 million for couples. What would happen if this expires is that would basically cut in half. So you'd go down to $7 million per person or $14 million for a couple. That is a 50% reduction in the exemption, which means more people's estates would be subject to taxation. The thing is, it's still less than 1% of all Americans. It's less than 0.5%, even at that increased amount, would have a taxable estate.
Yeah.
So it is an impact. It affects a relatively small number of people, but for those people it does affect, it can be dramatic because if you own land, if you own a business, if you own real estate, for example, those things that are relatively illiquid, if you have to pay the tax on the value of that, where does the cash come from? And that's really, I think, where people really need to do some planning about, if we have a taxable estate and I have things I don't want my heirs to have to sell, how will we pay the tax?
Right.
That's a real good planning question. The other one there is this limitation of SALT, the state and local tax deduction. If the thing expires, it means that people can deduct their property taxes, for example, without limit. Currently, this thing is capped at $10,000 for the whole combination of state and local taxes. If this law sunsets, that SALT cap at 10,000 is removed. So people who have, for example, more property taxes in a year than $10,000 would be able to deduct, in most cases, all of their property taxes instead of just a portion.
Yeah. So what are the candidates saying about this?
Well, yeah, that's a good question. They have different views, as you can imagine. I'll start with former President Trump. Of course, it's his bill, Tax Cut and Jobs Act.
Yeah.
So he would like to, just keep it in place. Although interestingly, he would like to have an unlimited SALT deduction. So he's, I think, kind of making a campaign promise to people maybe in high tax states saying, hey, we'll keep the tax rates low and we'll increase the amount you can deduct for state and local taxes. That tends to be more of how he's appealing. Vice President Harris, she's saying, hey, it seems like these marginal rates should go back up. We know we have a revenue problem in a variety of ways. People will say, well, we have a spending problem too. And I think you can argue effectively that both are true.
Yeah.
But what she's saying is, it seems like part of the solution to some of our problems is we've got to have a little bit more government revenue. This isn't a lot of money, and the amount of increase would fall largely on people who are making more than $400,000. So it's kind of that argument of, hey, people at the higher end of the spectrum, maybe they can afford to pay more in tax, whether they should or not. I'm not saying, it's just that is the argument. She would also want to preserve the $10,000 SALT deduction. Again, I think that's the idea of for people who are paying those higher property taxes. Let's say maybe we don't give them the tax benefit because they must have some money because they're owning taxable property at a certain level. I'm not sure. Although what you do look at in both of these is, in neither situation does either just letting the thing expire or just extending the thing as is accomplish what the candidates want to do.
Right.
So in order for them to do what they want to do on this list and this list, which is a whole lot of other tax related things, they're going to have to get cooperation from Congress. And that means that creates kind of a limit or a boundary, let's say, on what's really possible.
So they could say, more like they should be saying, we would like to do this, but we won't be able to do it unless we get help.
Yeah, that's exactly right. The legislative process, and I think the beauty of the American system and sub-government is there are checks and balances, and that any spending bills actually have to be signed by the House of Representatives. So you've got to have some cooperation. It's got to get through the House. It's got to be signed in the Senate, and then the president has the opportunity to sign it. So it's not a unilateral decision on this thing in terms of how it would work.
Now, Kent, close us out with something you remind us of constantly, and I have to admit that I really like.
Yeah, I love this quote. Educated optimism is an antidote for anxious uncertainty. It's true in so many areas. And what we try to do in things like this, webinars like these, things that we talk about educationally, is we just say, if we look at kind of the arc of history, whether it's markets, progress in medicine, economic progress, all kinds of things, the arc of history shows humans making progress, doing better. We have reasons for optimism that humans will continue to want to solve problems as they come up. Sometimes we wait a long time to solve them, like until we go, hey, we have to solve this now. Other times things surprise us, like the COVID episode in 2020. It's like, well, no one really caused that, or It was just one of these things that just happened, and boom, people just responded. Governments responded, people responded, maybe not in the best way all the time in retrospect.
That's right.
But the speed at which, for example, vaccines were developed or the healthcare emergency was kind of brought under at least a reasonable amount of control. And the fact that right now the economy and markets are at all-time highs and we're only 4 years away
Yeah.
from that, you'd say, wow, that's pretty good.
Yeah.
We've made some progress. So I just think this idea of educated optimism, looking at the past, seeing our ability to solve problems, our desire to solve problems. And, I mentioned earlier, it's in everyone's best interest for the economy to grow.
Mhm.
So both parties, both presidential candidates, they want to create economic growth. Now, they might differ in how they think they're going to go about doing it, but the bottom line of needing growth, we're all in agreement.
Yeah.
On that one. And I think that gives us some reason for optimism that, this election, while it's consequential, every election is consequential for different reasons. There's reason to be optimistic that markets will continue to do well, will continue to solve problems.
That's not going to go away.
There are bumps in the road. There always will be, but it kind of is this attitude of, am I looking forward thinking people are going to solve these problems? Or am I looking forward thinking this is it? Progress is over forever.
Right.
If you're an investor, you have to be optimistic because you're buying something today
Mhm.
in the belief that it will be worth more tomorrow.
Yeah.
That in itself is a position of optimism
Correct.
about the future. So here's a message from the past, from
Yeah.
our friends over in the UK. Keep calm and carry on. And then
Okay.
one other quote just to kind of close up with. I like the late Daniel Kahneman. He was also a Nobel Prize winner in the field of behavioral finance. But this is about, if you think about yourself and your children or people you care about. If you're allowed one wish for your child, he said, seriously consider wishing him or her optimism. Optimists are normally cheerful and happy and therefore popular.
Mhm.
That sounds good to me. They are resilient in adapting to failures and hardships. Those things are going to happen. Their chances of clinical depression are reduced. Their immune system is stronger. They take better care of their health. They feel healthier than others and are, in fact, likely to live longer. So as much as we can, I think it is to our benefit to choose an optimistic point of view.
Thanks, Kent. If you need to leave now, feel free to do so. We did have some questions that come in that hopefully
Yep.
you're able to provide some answers for. So the
That's
first one is, what's maybe the best option for short-term savings? What should we,
Yeah.
and not like $25, but a little bit more.
Yeah. Yeah. So likelihood of, I think the Fed is kind of they would like to lower interest rates, but they've also said recently that they're going to slow down that lowering. They lowered by 50 basis points just recently. I think the idea there is if it's genuinely a short-term reserve, in other words, it's something that you're going to need to access in the next 6 to 12 months, I would still recommend a money market or a cash-like account that's yielding somewhere 4% or north of 4%. That return is still higher than the rate of inflation. So you're actually getting a real rate of return on funds that are available every day.
Yeah.
Short-term treasuries, things with a maturity less than a year, shorter-term CDs could also be.
Mhm.
I just think right now, CDs give you a little less liquidity. They don't yield a ton more. If you are looking at putting that cash and wanting to have a higher interest rate for longer, let's say you just want to have cash around, you might want to have it around for 3 years. You
Yeah.
didn't anticipate using it. Well, then maybe a 3-year CD at today's rates would be a decent thing to do because the likelihood right now is interest rates are more likely to go down than go up. I'm making no prediction as it works. But if you just look at likelihood and what the Fed has said, so if interest rates were to go down a little bit in the next year
And
and
they
you
have
locked in
gone
a CD rate today, you might get a little bit higher rate on your cash by doing that than just by leaving it in a money market account, let's say, that will adjust more quickly to interest rates.
I don't know if this was particular to just the election, so you might be able to speak to that, but should we be considering investments outside of stocks and bonds?
Yeah, that's a great question. I'll start it this way. The answer there is diversification into assets that have a positive expected return is always a good thing in a
Yeah.
portfolio,
Yeah.
right? So stocks and bonds provide diversification. International stocks and U.S. stocks shorter term bonds, bonds of the US government, bonds of corporations. So those are ways to diversify. Then I think sometimes people say, well, what about real estate?
Right.
Real estate is a perfectly good diversifier as an investment. What I would caution people from doing, though, is seeing their home primarily as an investment. Some people think, well, I'm just going to,
Mhm.
buy a bigger house or something like that. It's like, well, by the time you pay property taxes and upkeep and all those things, a home is a fine thing to own and it hopefully will appreciate over time. But it's a tough thing as an investment. It's not liquid. You can borrow against it, but that has a cost. I think if you're looking at real estate as an investment, you either want to be knowledgeable about commercial real estate,
Mhm.
real estate that produces an income, or maybe you want to do something like own a basket of real estate in something called a REIT, a real estate investment
Mhm.
trust, where you're just saying, hey, for a part of my portfolio, I think real estate's been beaten down. Maybe I'd like to own a little bit more of it. We tend to have real estate in our portfolios kind of at a market weight. So whatever the weight of real estate, these real estate investment trusts in the market as a whole are at, that's what we carry. We think the market's fairly efficient at pricing real estate, so we don't see a reason to hold more or less of it. It's just kind of a question of what kind and how much. Our caution would always be beware of putting too many eggs in a single basket, which for a lot of
Mhm.
people, owning a single piece of commercial real estate becomes a huge part of their balance sheet. You just want to be careful about what that does to your overall diversification.
Yeah. So we had a question come in from one of our clients or participants. They're very concerned that if Harris wins, they're concerned about her tax proposal on capital gains when selling real estate.
Yep.
So,
Yep. So this is one where I feel like it's gotten maybe misrepresented a little bit in terms of the current state of the proposal. There have been proposals from Democrats in the past to tax all kinds of unrealized gains.
yeah.
So that idea of, well, gosh, if I if I have a house and it appreciates in value, am I going to have to pay tax on the appreciation before I
Mhm.
sell it? That's really not on the table right now. This question also gets to, well, what about capital gains tax rates? So Vice President Harris, one of her positions is she would like to raise the tax rates on capital gains
Mhm.
when you realize them. So this means if you have that house, it's gone up in value, you sell it, the tax on the appreciation could potentially be higher. But you need to remember there are very large exemptions for the sale of a primary residence. So depending on an individual situation, they may or may not have a taxable gain.
Mhm.
So it's a hard question to answer in general because it varies from person to person. But Vice President Harris would like to see that rate on capital gains taxation go up. The question is, I think her proposal right now is it would only be in place for people with earned income over $1 million in any given year. So
Mhm.
again, they're trying to say if we raise taxes like this, we're trying to move it up to the highest income
Mhm.
folks in the US. Yeah, I'm not saying whether that's a good or bad idea, but I think you just want to really understand the actual proposal on the table as opposed to listening to maybe a story that extends the real story. So someone says, well, they want to do this now, but boy, if they get in office, then they're going to want to do this one. Again, kind of looking at the history of legislation that's been passed, usually that doesn't work because you have to get it through Congress and there are some boundaries that are formed.
Well, what I'm taking from this, and perhaps this pleases our clients, is I don't need to worry about it.
I don't
My
think so.
my earned income is slightly less than $1 million each year.
Well, again, I hope, I've heard
It's
people talk about, taxes negatively, but at the same time, if you have to pay a lot in taxes in the US, that usually means you're doing relatively well in terms of earned
Mhm.
income or other kinds of things. No one really likes in the sense of, do I want to pay more taxes? Like, probably rather pay fewer than more. At the same time, some degree of taxation is necessary for the structure of society to work. We all want to, drive on roads that are in reasonable condition. We'd like to have police who are responsive when something goes wrong. We want to have courts to support the rule of law. There's lots of things that our taxes support. Certainly national security is one of those things. So, there are things that are stressing the budget. And actually, one of the things we didn't talk about was for both candidates, the economists who evaluate their programs, they're both saying that, hey, these things are going to increase the national debt and they're going to continue on in this kind of deficit spending.
Mhm.
So the question there's going to be some hard questions that are going to need to be addressed in the future, no matter who's in office,
Mhm.
because Social Security benefits are rising, Medicare costs are rising, and with interest rates having gone up, the cost of supporting the national debt is rising. I think next year, for the first time, the interest cost of the national debt will be greater than the cost that we spend for national defense. So there's some headwinds
Yeah.
there, that people are going to have to really think seriously about.
Well, one thing I've learned from a few of our optimistic clients, as I've said in meetings, is they've literally said, when I write that check to the IRS, I actually give thanks.
Oh, see that.
I'm not saying they like the amount or whatever, but they just recognize that they've been the beneficiaries
Yeah.
of being in this country, really,
Yeah.
and doing what they do.
Yeah. Our economy is the envy of the world today.
Yeah.
People want to come to the US for a reason. And as Warren Buffett says, we've all benefited from the tailwinds of the US economy and the US market. That's certainly true.
Well, Kent, want to thank you for leading this today, really. And I want to thank all of our listeners. And, a few things. If you'd like to have a conversation with us, we would love to have that. If you're interested in becoming a client, we'd be interested in talking to you.
Absolutely.
So there's some information on the screen about how to get in touch with us. So again, thank you for joining us today. And we look forward to seeing you at our next webinar.
Thank you. Thanks, Jason.
Yep.